Yeah, I'd love to hear more about all of you. So I have a really diverse background, and I only started actually literally doing angel investing about 5 years ago. And truth be known, I never thought I would do it. I never thought I would actually write a check with my money, because I've been in and around the ecosystem, and I know all the things that can happen. And I was also CEO of a venture-backed company, and just have lived through all the trials and tribulations. So it's somewhat daunting, but as is the theme through what I'm going to say, I really bring a lot to the table from my own experience as a person that's been in innovation for years at Stanford Research Institute, doing product development, sales and marketing, running divisions of Fortune 50 companies. And so I really think if you love innovation and at the end of the day you want to be in the ecosystem, there's all kinds of ways to do it, and this is one, and it doesn't have to be exclusive. It can really complement a lot of other things you do, including being an entrepreneur yourself. So I just summed up my presentation. But I'd love to hear a little more about who you all are. And then I also want to add that even though I have quite a few slides, I relish the opportunity to have an interactive conversation, because that's what's great from my perspective, is having that opportunity to hear what you're most interested in and adapt. So hope we'll have time for that. I'm going to keep an eye on the clock.
Okay, shall I start?
Yeah, please.
I'm Dan Newmark, live in San Francisco, helped build and sell an enterprise software company. I'm an HBS angel and an ASTIA angel in training.
Great. We do some work with HBS. Good. You know me, right? Yeah.
Hi, I'm Olga. I'm from Ukraine. Me and my partner Evelyn, who's not in the room, but we are managing partners of Accelerator in Kyiv. And we have companies we support at the seed stage. We have 8 investments, and most of them are global. So we are here to understand whether we can seduce you to invest into our companies as well.
When you say global, are they located in many countries, or they're?
No, they are focusing on global market.
Oh, okay.
But
they're based.
It means U.S. market.
Okay.
Not our market, but rather the.
But they're all based in the Ukraine.
For now.
Yeah.
They are incorporated in the U.S., but
yeah.
they are based for now in Ukraine.
Okay, interesting.
And also, Olga just made it into Parliament, right?
Yeah.
Congratulations.
Wow, huge. That's awesome.
So she can make changes from within the government.
You can do a Jobs Act too. Wow, neat.
Okay, hi, I'm Magda Kłoska. I'm from Poland, and I run Gamma Robots Accelerator. It's a part of Hard Gamma Ventures. And right now in November we started our second batch of Accelerator. And in this edition we have 7 teams, and all these projects are technical in IT, mobile, because it's our area of interest, and I would like to bring some part of the US to these companies in Poland, and to early in February to bring them to US to present them to investors here.
Nice. Will this be the format for that?
No.
I guess I should ask Yuri. Okay.
Sorry?
I'm just. I'll ask you later.
Are you hosting? Are you hosting the companies from
the
Poland?
star
Not
companies?
yet.
No,
The
not
plan
yet.
is to partner and provide them next step here.
Yeah. Okay. Great.
Vadim Slavin, we co-founded the startup Monthly with Beauty. So I'm sure you know just a little bit about us since you're here.
Yes.
So thank you for being here.
Thank you.
I'm Brian Kaufman, and I'm an early stage investor. I've done it about 7 times. I decided to learn how to do it.
Good for you.
Let's those trade spots, yeah. You're no relation to Kaufman.
To some, yes.
It's sort of a good name to have in this industry, though,
Yeah.
right?
Elena Elik, I'm originally from Russia, but live and work here for 12 years now. I'm a CPA by profession, but recently invested in my first startup and joined the team, the startup from the start monthly.
Fantastic.
So trying to now postdoc, not right.
Hi, I'm Wayne Sutton. I co-founded an accelerator incubator for women, Hispanics, and African American last fall, and left that in May and started working on a platform called Pitch 2 to manage relationships between entrepreneurs and investors. And currently participate in the Ask the Angel program.
You're speaking next. No.
Yeah,
later.
speaking of five.
Lilia Sherman, I have done a bit of angel investing, hoping to do more, and I also provide all various kinds of advisory services to business technology companies, both very small ones as well as big ones.
Andros, I'm representing Estonia's development and funding agency here in Silicon Valley, and helping our startups to make a connection here. That's my main focus.
Yeah, that's great. We had a chance to talk.
Yeah, so Yuri, founder of Startup Monthly and managing partner at Monthly Ventures. So we also invest in startups, and hopefully we'll co-invest with participants of the program.
I'm Perry Gorman. I'm actually a founder, and I'm an angel investor in my own startup.
Okay, what's the criteria, Perry?
But I'm moderating a panel tomorrow night, so Yuri and Pimo were nice enough to invite me to participate today.
Yeah, so maybe you
That's
can
great.
present the different aspect as well, like startup grind and what do you do? Like about startup grind.
Oh, so I moderate like a tech celebrity event where we interview, we do fireside chats with tech celebrities. Yeah, or so we call them.
Are you down here? Because I'm part of the North Bay one, like Thursday. Are you part of the North Bay one?
Of Startup Grind?
Yeah.
No, I was in New York, but I will tell you.
Okay.
And also Jesse, he's just joined us.
Oh, yes.
Good afternoon.
Hi.
So I'm a tech entrepreneur, and I also have a couple of organizations. One is Latino Startup Alliance, so supporting Latino tech entrepreneurs. And the other is Spark America, which is introducing tech entrepreneurship at the public high school level.
Oh, fantastic.
Yeah, he's doing some great.
Wow. Okay, great. Okay, so
You don't want to know about me?
oh, come on.
It's okay.
No, does everybody know you?
Yeah.
Okay.
They've heard it over and over.
Okay. I know
Joking.
Pamela, she's great. So, first of all, no halo, right? But the point is, I think angels have to bring tons of heart to the table and tons of muscle. And that's, the muscle is a really key point. That it's not really much about money. So I'm starting off with, the harsh reality of what are the odds. And Kaufman has wonderful data that can amplify a lot of this. But I don't know how many people realize this, that 50% of all investments, you never see a dime back, 0 return. So, that goes on the table first. And then 1 in 19 may be a significant hit to offset. The median returns 2.5 times what your money was that you put in. But then that's over close to 5 years. So it really is very much about odds, and I think what gets people hooked is we all think we're really smart, and we think we can figure out those unique situations. So we're in the other 50%, and we actually can do this often and strategically enough, carefully enough, so that we're in one of those high return categories at least once or twice, and that makes it financially worthwhile. Hi, Bill. I'm starting out with the bad news.
Uh-oh. So you can cover it.
Yeah. So really back to the motivation. So why do this if it's not about money and it's so risky? And I think it's all about, you have to really, really be passionate about innovation, about loving being in this ecosystem. It's stimulating in every respect. And there are days when you have to stop and think, what could be better than being an entrepreneur? What could be better than spending your days and nights and weekends with nothing but incredibly bright people, incredibly tenacious, passionate, people that are giving their all to something, their lives, their money, and they're by nature incredibly optimistic. So, I find myself at times, I'm sure we all have people in our lives that think, oh, the world's just falling apart. What's happening? The youth today is not what it was before. And I so often now find myself saying to people, you know what, that's just not my experience. And I partly say it to help them have a better day, but to shed some light on the kind of people that I run into and am around every day, 24 hours a day it seems. And not just in this country, but all over the world, that people really care deeply and are motivated for doing the right thing and making money. So I think there's magic to being in the ecosystem, and the opportunity is to really be a critical player in that ecosystem and add value. And bringing money to the table is a piece of that value, but there's a whole lot more. So the serious side of this is, while it's daunting at times, I'm a member of a group called Golden Seeds, and Golden Seeds is an organization that is very serious about demonstrating that you can make money in angel investing, and in fact, make more money if you have a woman on the founding team. And it's not about women running companies, but it's really about getting gender diversity. And there's also a subtle assumption that it might be still more difficult for women to get access to capital, in particular in the early stages, and there might be an advantage. It might be an underserved asset class. That's probably changing, but hasn't been changing very quickly. So there are also social benefits from engaging and being involved in empowering women as investors and CEOs. So one of the challenges, I think, I know that this organization is focused on IT, but it's challenging to really have a sector focus and maintain that sector focus. So especially, I think if you're still an entrepreneur or you're involved in a corporate role or you're surrounding yourself with one ecosystem, you can do that, but there's a real challenge, I think, to maintaining your edge and relevance in a sector and continuing to bring that to the table. So one of the things that, in fact, in our group, we'll often joke about the fact that someone might see an opportunity in a sector that I'm really completely knowledgeable about, and I'm very aware of all the risks. And I'm thinking, oh my gosh, no. Don't ever work with carriers, for example. I come out of the telecommunications industry. I know how hard it is. But that also means I'll miss opportunities. And people who, and then I'll see something in a sector I know nothing about. I mean, I'll never forget an opportunity that looked so bloody simple on the surface. It was greeting cards. There wasn't even any tech to it. And it had some kind of cool social benefit. And I thought, well, how hard could this be? Until I spoke to someone who really knew consumer goods, understood all the things that can go wrong, and then I began to see the complexity, even in something on the surface that's simple. So it just says that, and so we joke that be careful about what you don't know, because that always looks more attractive. And the flip side, you might become too risk averse in a sector you really know what all the problems are. And then this whole notion of the myths of angel investors, that it's kind of easily disposable money. You know, you may hear entrepreneurs say, let's just go get some angel money. As though, well, that's just easy, and it doesn't matter if we lose it. You know, it just kind of flies around, and, you know, as if, you know, that's not also really hard-earned money that somebody doesn't want to lose. So, and then I think when you're the person being approached, you know, I was with somebody yesterday that is very well known in Silicon Valley as an angel, and he said, you know what, I'm so tired of people just approaching me for money that I always say, if that's what you want me for, let's stop the conversation now. He said, I'm all about value add. And that's been his life and, you know, successful operating career. But I think the moral of the story is we all know that money doesn't take you far enough. And one of the key things that you can do at the early stage is understand what are the milestones that that company has to achieve. Once they get the money, how long will it last? What do they have to achieve? And then are you in a position to help them achieve those milestones? And if so, then you've got an even greater opportunity to influence and help make sure they aren't asking for too little money. They've got enough, and you can be part of making sure they get to that next level in the process. So that's really the point of the muscle. It is about figuring out what's needed at that next level, and whether you can, and you know, think about what groups you're in, whether you and your colleagues can actually really help shepherd that company along. And then the other piece of this equation has to do with, well, I'll get to it in a minute, but it's shepherding along multiple levels beyond the Series A, Series B, etc. And the other key theme that you'll hear me say over and over is, it sounds so simple, but it's hard. And it's, you know, sometimes the soft stuff is the hard stuff. And that's that it's all about people. So one of the things it's easy to say is, how can you really be sure that your own values are aligned with the values of the entrepreneur? The kind of company they want to build, how they operate. And it's hard, especially if it's a first-time entrepreneur or CEO. And you're basing a lot on your judgment of them, but you don't know them. You might not have known them a long time. So you really can't find out a whole lot in 3 weeks when people come rushing in the door and want to give you a pitch and a process, and why can't I have my money in 3 weeks? What's wrong with your group? It moves so slowly. And so the flip side to this is diligence is not easy to do, and it's something that entrepreneurs don't like, but there's got to be a way to improve this process. So this data came from the Angel Capital Association, and it's one way of looking at diligence and how the more time you spend in the diligence process, it actually does correlate with higher returns. So there's sometimes when we wonder about that because you can spend a lot of time, but I guess overall the odds are that there really is a correlation. Then, you know, how do you do the kind of diligence you really need to do and yet not turn people off? So I don't have a magic bullet answer for that, but we're really trying to do a lot more behind the scenes as soon as we hear about a company, trying to learn more about the entrepreneur, who knows that person. And I think that's why sometimes people accuse the Valley as being clubby, or that, you know, this whole thing is a club you've got to get into. And yet, I think it's really simply evolved into a way of trying to learn about the people, because once you write that check, that's all you can count on really, is the individual and how they're going to take care of the money and the opportunity. So, some of the key lessons to date. That first fact honestly shocked me at the beginning. I was asked a question by one of the founders of this angel group. Well, you know, Gwen, what percentage do you think of the companies actually need more money? I'm thinking, boy, by the way they're asking me that question, it must be 50%. Could it be more than that? And the answer was 100%. Well, I thought I'll err on making it 99. But, you know, so the other kind of moral of the story is there's often an opportunity down the road. So when you're caught up in the, oh my gosh, we have to close quickly or we'll lose the opportunity, 99% of the time, you don't lose that opportunity because there's an opportunity down the road. So I think it just says you have time to really trust your instincts and do more homework. And then this, understanding the importance of follow-on participation is, again, just recognizing that if you're in on a really good opportunity, you want to be able to participate the next round and the next round and the next round and protect those rights, the pro rata rights to do that. And then the ecosystem. This, boy, that bullet could be half a day because you're never just investing in the company, so it's not just between your investment and the company, but it's the company of the company. Who else is on the board? Who else is an investor? And how does that shape what actually happens over time to your investment? And then there are always surprises. Once the deal is closed and the first board meeting and, whoops, what happened to that money? We thought there was money in here. Well, there are bills that had to be paid and, a lot of things that get pushed to the side until the closing. So I think you really have to have the right, I guess it's really ability to stay patient and be calm through the process. I put this chart up because I think there's also this notion that angel investors are just people that are really, really rich. And in this part of the country, that is really not the case. If you think about, I wish I had statistics. I put the third bullet down there, fourth bullet, is really a question. Because I wonder what percentage of adults in the Bay Area would meet the criteria of earning at least $200,000 a year. And I would bet it's higher than 3%. And the point is, I don't know how many of you are working full-time in other positions, but I think there's a real interesting opportunity for people that are executives at Cisco or Google or Apple or all of these great companies that have grown up through this process to participate in an angel group or as angels and bring tremendous value back to themselves, their careers, and then the knowledge they bring to the table. We have a few people like that in our group. It's just immense, and the value they can then bring to the company. So I'd love to dispel this myth that you have to wait until you're really rich and really old, that you really can participate in meaningful ways along the way.
Did you mean less than 3% of taxpayers?
Yes, sorry.
Okay.
Yeah.
Which means it's a very small percentage of the taxpayers.
In the United States, yeah.
Well, but you said greater in the Bay Area.
Yeah.
It's greater than 3% in the Bay Area.
Probably greater than 75% in the Bay Area.
No.
For well-educated adults over
Oh,
30.
no, the first one, over 200K.
With 200K.
That's a lot of money.
I'd say it's 5 or 6%.
Right.
A lot of people?
It's a lot of people. Think about 300 million people.
In California.
Yeah.
That's not
We're talking about
It's-
Silicon Valley.
We're the
Yeah.
only people in the US, so.
No, there's
You-
not enough that many people in the US. What's the population of the US?
300, but these are adults.
Adults.
Adults, yeah.
Uh-huh.
Yeah.
Oh, right, taxpayers and tax.
Yeah, 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 yeah. I was actually surprised. I thought it would be higher than that number, but I looked and found out it's just barely 3%. So I thought, well, you don't have to be 1%. You can be in that 99%. But yeah, I guess it's highly skewed. But again, I think about this area and the ecosystem here and how many people are in just great jobs and they're in their 30s, and I wish we could convince them all to get more involved in the ecosystem while they're working full-time.
So related to this kind of similar thought is, you know, when I used to think of angel investing before, I used to think of, you know, $100, $200, $500,000. But a lot of investments are actually, you know, well under 100K in some cases for very early stages. Is that true? Do you know what the, you know, what the average or how the distribution is of the size of investment?
For an individual or for a total investment in a friends and family or Series A?
For an individual angel in a round, you know, per round or per company.
Yeah. I would say it's between 10 and 50. 10 is the low end, but there are a number of groups. Sandhill Angels, I think their minimum is 10,000 per deal. Our group has that low of a minimum for certain kinds of deals, if they're pre-revenue and very early stage, but otherwise it's 25,000. And I think that's kind of normal. The Angels Forum is 10 for certain things, otherwise 25.
But since you say that you always want to be ready for the follow-up
Right,
investment,
yeah.
what is the approximate number you should somehow kind of reserve for one company?
So,
Starting with 25, but then next round is higher. So if you want to keep your ratio in an equity stake,
right.
you know, you want to add, I think, 100 or 200? What is the...
Well, I would, as a rule of thumb, do a 2.5 to 1 ratio of holding in reserve, 2.5 times what you put in the first time.
2.5. 2.5 times.
Yeah, yeah. But you can also think about portfolios, building a portfolio, so that, you know, if you had 10 investments and they were 25,000 each, then you'd be putting 250 over time, over say 3 or 4 years or more. And then you'd need to think about how you add to that if you need to. So that's the...
Accredited investor is...
That's the legal term in the United
it's a legal,
States.
And
yeah.
you have to be registered somewhere.
No.
So
No.
you say, I am accredited investor.
By your income.
You have to
or
be
what?
asked by the company. I mean, the legal doc should require you to sign off that you are, and then you just have to tell the truth.
It's actually a means to protect the person
Yeah.
accepting your investment. That they're not
Correct.
taking advantage of someone who's uninformed and, you know, incapable of bearing the loss, essentially. It's liability protection from the company.
Yeah, yeah. And down the road. Okay. So in trying to just simplify everything about this process, I thought, you know what, this is such a great case of where angel investing is, you've got all kinds of deals, you could do all kinds of recipes, but there are really only 3 ingredients if you net it out. And it's people, the big idea, and money. And then I thought, but what's the common thread? I'm so convinced that at the end of the day, this is all about people. It's a people business. And if you don't like people, you're not going to like it. And I thought, well, the common thread again is people. Because every dollar that goes into the company comes with a person attached that better be a good egg. And the same with, you know, the big idea. You don't get it without the right people. And you get it at the beginning, but if the people around it aren't nurturing it, it's eventually toast. So I have my 8 rules I came up with. So rule number one is, it is all about the people. And when you're looking at a company, nothing happens without the right founder, CEO team. And this is especially true for early stage. I mean, later on, once you've got momentum, you can change out people. It's never easy, but you sure don't have that opportunity at the beginning. So rule number two is, don't fall in love with the big idea unless you remember rule number one. That's easier said than done. I have found myself just sitting, you're just so captivated by an idea and a plan, and I guess we'll have time to tell stories one. But anyway, it's hard to do. And you just have to keep remembering, wait a minute, you know, when you see the red flags about the person with the idea, maybe it's a path you don't want to go down. And then rule number three, what I was really saying already, that it's not just about the money. In fact, if you really want to figure out a great way to make money, you might want to look at alternatives. But to mitigate your risk, you need to think about developing a portfolio. And then this is also something that I think the process of angel investing really appeals to people that love to learn. Because I don't think you can ever truly be an expert, because as soon as you think you've figured it out and you've learned all the things that can go wrong, the world changes, rules change, the game changes, you know, the ecosystem changes. And so if you're somebody that just loves to learn and you're comfortable with that knowledge that, okay, I know enough, I'm ready to jump in, then I think this is a great way to be in the ecosystem. And then when I say know the ecosystem and that you're on the bottom rung, the angel investors are on the bottom rung. And so what happens to you is often outside of your control beyond that with the next set of players that come into the game. But again, if you can align yourself within the ecosystem with other VCs that you really like to work with, you can start to mitigate and really benefit from each other. And then on the mechanics, you know, I mean, when I heard about this group forming and serving as another way for people to learn, I think it's really fantastic, because there's so much to know about the details of the mechanics of the investment process. You know, everything from valuation metrics to the details of term sheets, and they change all the time. And you think you've figured out something, you know, and then something else is no longer in vogue, you know, and people have different ways of doing convertible notes, and then that method is less interesting than before. So we could, you know, go into a lot of detail on the different mechanics, but just at this point, I think it's really, personally, I think it's really important. I've seen so many ways that deals can be structured, and there are people that have a different point of view about that and say, look, you know, come on, it's either a great idea or it's not a great idea, and all this other stuff, like, don't waste so much time on it. But I guess it's for those that are in the middle, when how you structure this can make a huge difference. And then this is really about just thinking about what you most like in the world of opportunities for investing, because there are so many different kinds of opportunities, and recognizing that once you've made an investment, you can't get out of it. I mean, I guess people are coming up with ways to sell their equity at the early stages, which is kind of new. But for the most part, you know, people say it's harder to get out of an investment than a marriage. So it might last longer too. So you want to think a lot, again, about the people and whether they're people that you want to be spending a lot of time with and working with. And then the different angel groups are really different. And I think it's worth checking out different angel groups and finding one or two that you really enjoy being with. And they all have different focuses, from investor circle, focuses on social benefit, the Indus entrepreneurs, people from India in particular, and the band very technical, and Golden Seeds with our focus. And then this is really, I really think, again, being able to assess what you can bring to the table in terms of milestones is really, really helpful. Yeah, just thinking in terms of connections, your own knowledge base, who you can introduce the company to, if you've got a sales and marketing background or a technical background. It's that operational experience, I think, that can really go a long way. And then rule number 7. This one is also easier said than done, especially if you come at this with a lot of operating experience. You've been a CEO multiple times, and now you're going to invest in a company. How do you play that role, work with the board, work with everybody else around the table, and realize it's their company, not your company? So that's, it's just, I think, a recognition that you have to move into the realm of influencing. And I personally think there's very little control in the process. You can, you can get a board seat, you can have investor rights, but once you've written a check and the money's there, and you really have to learn to manage by influence. So it's very different. And then that comes back to it's all about the people. And I sound like a broken record, but I think the other element here is when people are coming forward to pitch their opportunity, you might ask yourself, why is it that this is a good opportunity for you and your money versus someone else's money? And what else can you bring in that, to the table in that process? So, if you think about, how many of you have worked in corporations in your careers, but it's so different when you're on your own or you're with a group and you're in an ecosystem, because then it's not only all about the people you're investing in, but the people in that ecosystem. And that's why I said you have to get really good grades in interpersonal relations, because you're not only helping to drive the process with a company, but their success is also about getting great customers and working on exits. So everything about, from that next dollar, the next round of capital, to the world that they're in. So again, it's so much about recognizing you're navigating in that broader ecosystem. So the people are everywhere. So in terms of this,
I was about to take a picture.
oh, you want the people?
No.
Gwen will probably share the slides,
yeah,
right? Is that okay?
Sure, yeah.
If she'll send me a copy, I'll send you one.
Yeah, happy to do that. So I'm wondering how much, I've really talked a lot about the ecosystem and people, and I'm wondering how you can deal with that kind of information when you're somewhere in Europe and you're looking to build relationships here. It's, again, I guess, having people here that can be part of the ecosystem here. And then when you're in maybe an even tighter and smaller environment, one of the benefits of that may be that, it's really, at the end of the day, about your reputation too, and that spreads really fast. So the good news is if you're working well with people and adding value, then hopefully that good news spreads and gives you more opportunity. So I'd love to take questions and again, drill into any level of detail. This was pretty high level.
Thank you you. Can we talk more about angel groups and how they work, how you join on, how they form?
Sure.
What is the business model for the angel groups?
Yeah, that too.
Sure. Okay. So first, they're all a little different, but typically the business model is they have fees. The fees may range from like $2,500 a year to maybe not quite 10,000. I'm not sure what the Angels Forum is. Do you know, Bill? It's high, but
7,500?
yeah, somewhere up in there. Yeah. So, and then you basically you ask about it. You find out who's a member. Ask if you can join. It's usually a member sponsors a member. It's usually not that difficult to join a group.
Does it go to operations or it goes as an investment?
Oh no, no. Yeah, the dues are. I don't know of any group where they really cover operations expenses. So it's a problem. It's a systemic problem. Angel groups are usually run by volunteers, and
Can we
just
turn that off? I think that's where the Skype thing's coming from as well.
It's a ghost.
Sorry about that, Gwen.
yeah, so they're really run by volunteers. I think, for example, the Band of Angels is run by basically 2 people, and I think they're now both members of their own fund, so they get a little bit of money from fees from the fund that they've raised. And the same with the Angels Forum, and the same with our group. We have a core group of people back in New York that are actually partners in a fund, but it's a small fund. It's about 26 million. So it's definitely not.
Just turn off on the TV.
Yeah.
So what, for an investor who joins such a group, what is it that happens within the group that is different, helpful, and so on versus
Being on your own?
somebody on their own?
Yeah, okay, great question. First of all, when you're in a group, there's, I'll speak for the group I'm most familiar with, and they're all fairly the same, but ours, we have meetings twice a month. Once a month is a screening meeting, so there's a lot that goes on behind the scenes where people apply, you find entrepreneurs, they fill out applications. We probably see across the country like 100 or more a month of applications. So then there's a screening process. If you were on the screening committee, you'd start to see how that works. And then there are people invited to come once a month to be screened in person. So as a group, so if you were on your own, you'd be out there, you're only 24 hours in the day, so it'd be hard to have the benefit of that funnel and that sifting process, and you wouldn't have the benefit of multiple opinions and eyes, and that's really helpful too. So
And co-investments.
And co-invest, absolutely, yeah. I was going to get to that. That's good, thank you. Because then, when you come to the actual monthly forum meeting, you'll see the top 3 companies for that month, and then there's a process where collectively people say, well, how many are really interested? Enough to devote a lot of time to diligence. Back to the diligence time frame, and if you're doing that as a volunteer, it's a big commitment. And so people say, yeah, I really like this. I'm going to commit the time, form a deal team. Then that deal team goes into diligence. So you have time, you have the ability to share that process with 5 or 6 other people and really get the benefits of that. Then you have the group to co-invest with you. And so let's say the company needs or is looking for $250,000, and you think, well, I can put in my piece, but I want to know the people that are around me that are part of it. So the rest of the group comes in. Or you get maybe they need 500, and you go to Harvard Angels and you say, gee, I know this great guy at Harvard, we've worked with them before, let's syndicate. And you have a group to syndicate with and not just a person. And then in many cases, in ours as well as many others, we do have a fund. So the benefit of that is the fund may come in, and that's really helpful. And then you have the ability to know you've got follow-on money along with yours to keep the ball rolling. So there are some really tremendous benefits to a group. And you know, I've heard people say that being a member of more than one group is also extra good because you've got many different perspectives. And depending on your domain, you may want to do that, like a life science group plus another group, that kind of thing.
Yeah. So who's basically leading such groups? I'm sure any process requires a leader.
Yeah.
Somebody who is driving, you know, interests and new members.
Yeah.
Who are those, you know, supermans, superwomen? You know?
The crazy people. No. So at Golden Seeds, I and another person have been doing that for 3 years here, and for the group in California. And then we had a person who founded it back in New York. And when I say have been, I mean, for me, I just got to the point where I said, I can't keep doing this much time, you know. So, because it really consumes your life. So
we have our own angels group as well. So who is managing it?
Yeah.
So
but
usually
even I and other team members.
Right. It's your midnight job, right?
Yeah, it's one.
Yeah.
So typically it's an angel itself.
Oh yeah.
Not an administrator, not somebody you invite, or you know, somebody who is
On the salary.
pardon me?
Not somebody who's on a salary.
Yeah, not somebody who is on a salary. This is somebody who has a skin in the game.
Right. Right. Yeah. I mean,
but
there are attempts to hire somebody to help, like Karetsu has an admin, and we have a team of a few people back in New York, but they're also working both to support the fund and the group is 400 people across the country. So it's really gotten big.
Gwen,
Yeah.
and maybe, I'm not sure, but part of the question may be, you know, how do deals get done as opposed to how does the group get managed? Is that part of the question?
No,
Because
actually, yeah.
it's just how does the group get managed?
I'm interested is like who is behind each group? Is it somebody who is on salary, or is it somebody who just enjoys doing it anyways and takes the leadership of organizing a group, understanding all the benefits of having a group, having a strong group?
Yeah.
So you more or less.
I think everybody I can think of, including Ian Sobieski, who founded the Band of Angels. He's a big, well-known angel in the Valley, and he loves it. And then he got Nicola to help him, and I know she's a member of his fund. And so, you know, I think it really, I can't think of an exception to that rule, actually. So it's people that love it, come together, maybe they get somebody to be an intern for a while, and then, you know, take some of the fees to pay for somebody to do a little bit of work part-time, and then get it going from there. But
if I may chime in.
How do we do deals?
What I see is in all of these groups, frequently you have subgroups that are led by angels who are focused on, you know, either sectors or specific deals.
Right.
And so leadership within an angel group cannot depend upon a person.
Right.
It has to come from within the group. And so you see our experience, you know, particularly with the Tech Coast Angels, which is a huge organization. You see lots of people who take the lead.
Exactly.
In a good angel group, you know, an opportunity arises and somebody grabs the lead and pulls people with.
Absolutely.
I think
that's excellent. And in fact, you know, what just happened at Golden Seeds out here, myself and this other person were co-leading, and we've morphed that. We did actually try hiring somebody for a few months. It just doesn't work. Their heart and soul isn't in it, you know. And So now we have a 5-person operating committee. Somebody's in charge of the deal flow, managing the deals, making sure oversight so nobody drops the ball. How's it going? You know, did you get this person plugged in? That kind of stuff. Somebody who's doing membership, when people come on board, who's helping them, getting another person to be their shadow, you know, all that stuff. So we have 5 different roles, and that's working. And then, to Bill's point, in addition to that, let's say you're in the room and you are super excited about an opportunity. And we'll ask, well, are you willing to lead it? And if you raise your hand, everybody says, great. And then, you know, you're the lead on that deal. And then people will help you, and if you've never led a deal before. But then you are the leader for that particular deal. And then maybe when it comes time to the board seat, well, are you the best person? Do you want to take that on? Or is there somebody else that might have a better skill set for that particular company? So you can have multiple leadership hats on. Yeah.
So the members of your group, for example, are they, is that their like full-time job, so to speak? They have another full-time job or like a part-time job? Or
it is, yeah. The only people that really are full-time are the probably 4 or 5, 6 people maybe back in New York, maybe 7. I think about them all. But in terms of members and people taking on a leadership role intermittently, some of them are full-time employed. One is a guy who just joined Amazon. He was at Google. Another is at eBay. In fact, she's coming tomorrow night. Oh no, tomorrow night to be part of the panel.
Yes.
Susan Haley. So they can be full-time, and then they have to scoot out of their job for a couple of hours to come to meetings. They can't do all the screening meetings, so they really rely on others to do a lot of that deal processing work. But we love those people because they bring such relevant, immediate knowledge of what's happening in the market.
So that's like the leadership team, but what about like 400 members? Are they have like day jobs, regular day jobs?
I would say maybe 25%, 30% have regular day jobs. I would say very few only do this, and the rest either have consulting practices, they teach, maybe they've been attorneys and they're cutting back on their hours, but they're engaged in some way in the work world, and then they do this to complement. In fact, the founder of Golden Seeds talks about portfolio careers. We have portfolio careers. I think she came up with that phrase. But yeah, it's tempting to be full-time involved, because what you find is, and I don't know how people like Bill do it, because a company starts to tilt, and it's like, oh my God, they're, a month of your life might just be totally consumed. And, I happened to have an experience where I thought, I was actually taking 3 weeks vacation. And I thought, great, I'm just gonna, I'm gonna figure out, a few things that I'm thinking about doing next and where I'm gonna focus more intensely. And one of our companies went into needed money, it was a panic, it was a mess. And there went the vacation. And I remember thinking to myself, what if I had, because I also do consulting work, I thought, what if I were in the middle of a project? What would I have done? So I think you have to have that ability to flex. So the more you can have flexibility into whatever else you're doing, the better. Or else if you're full-time on something else, try not to take on a board seat or something that's really going to be more consuming than you expect. Yeah.
It's interesting because with the data that we have, we know that a lot of deals, companies fail. They go wrong. With angel groups, I assume that when a moment like that happens, then the group go on higher alert saying, what can we do to save this company? Whether it's acquisition, acqui-hire, or do they need more investment just to get to the next phase, to then to have acqui-hire because we know they're not going to give us the return that we would like? So how often do you see that happening? In terms of like, all right, we do it, I mean, because then the other side of the fence is still where, because I assume that there's still this, the same number applies to angel investment, to the how many can fail and not get income, to angel groups. But angel groups come in to where with a group you have a chance of possibly saving to prevent the group overall from losing money versus the individual.
Yeah. And you know that, well, it's interesting. I think in our particular group, we probably err on the panic and get involved, even operationally involved. And when I say err on, I don't mean it's bad at the end of the day, but I think if we were a bigger fund or purely a fund, we might say, okay, well, write that off next. Because I think, I mean, I'd love your opinion on that, Bill, but I think that when you're focused on a fund and managing that, you've got to keep that forward momentum and figure out where to cut your losses. But often the few that I've observed, it's the person that really knows the most about that space may jump in. I'm thinking of a case where one of our members became the CEO for 6 months. I don't think they paid her a dime. I mean, maybe, but it was just, oh my gosh, we've got to get through this. Jumped in and did it. And then, you know, pulled it around, got more money over time. Now it's going back up. But that, so, I'm not sure I'm answering your question. I can think of another case where we all just had to let it go. And that was a case where it was so, we were so dependent on the CEO, and it was so wrapped up in that person's head. It was a software company, but we still just couldn't extract the person from the code and from the opportunity. So we just had to.
Do you apply metrics to these investments?
Absolutely,
and
like crazy.
And in terms of
yeah.
you know, success over time,
yeah.
right? Because the ROI, or you know, what do you see or expect from your group, and you benchmark that versus the others?
Yeah, yeah.
I'm sorry, Gwen, and we need to wind it up.
Okay.
This question.
Okay.
We've got Bill waiting.
Yeah. Yes. So the IRR at the moment, what we measure is the founder's IRR and co-founder, because they have the longest period of time, and then the fund. And the longest IRR is almost 27%, which is very high, but it's not realized because we don't have enough exits. So it's the on-paper IRR. It's measured by valuation of the next level and which ones are written off and not. So it's, I would say it's impressive, and our fingers are crossed. Yeah, but we measure every deal. And yeah, there's the 2 co-founders of our group are former investment bankers, and so they bring all of that discipline, and then we say, but we're the entrepreneurs in Silicon Valley, so we bring the entrepreneurial and operating experience. Alicia's laughing.